Welcome to LubeTrends. Thanks for joining us today. I'm going to ask ILMA President Ann Ball to kick off the session.
Thank you, Holly. I'd like to welcome everybody today to our LubeTrends virtual town hall. The topic today is insights into the Europe, Asia, and Latin American markets. Going to be discussed and talked about by our friends at Kline. We have Annie Harkane and Konstantin Melanchuk and Gabrielle Tarl and Jason Moncrief with us today. Thank you for joining us, and I appreciate your attendance, and thank you for being ILMA members. Thank you.
Okay, so I just want to take a minute to thank our longtime sponsor, Chevron Oronite. They have been with us for at least 2 years and very supportive of these town halls. We greatly appreciate their sponsorship and their partnership over the last couple of years. And now I'm going to ask Annie Harkane to kick off the session.
Thanks, Holly, and thanks, Anne. Pleasure to be here again after our first session last month, looking at this same trend and impact in the US and Canadian market. So just for you, those of you that don't know me, as Holly and Anne said, my name's Annie Harkane. I'm the Vice President of Kline's Custom Research and Consulting Practice, and the team with me today all work in that same group, where we solely focus on the lubricants value chain and associated products and in-use applications and industries. It's been really exciting to have worked with ILMA over probably now 12 months, I think, Holly, on this project. Obviously a few delays given that we weren't able to all meet in person at the annual meeting, but a great opportunity today to share the rest of the world and what that looks like. So
just real quick, Annie, I wanted to let people know that if they have questions, they can put them in the Q&A section of at the bottom of the screen. You can submit questions that way. You can also submit them in the chat, and we will get to most questions. Some of them we'll answer live, others we will get to, most of them at the end of the session. Thanks, Annie.
Great, thanks, Holly. Yeah, very good point. Yeah, please answer any question, type in any questions, and the team will try to respond immediately if it makes sense. We'll also have some time for Q&A at the end. So yes, as I was saying, it's exciting to have been working with ILMA over this time and really develop this very novel research. For a long time, people have been talking about what the impact of electrification will have on PCMO, passenger car motor oil, but less so on the impact on metalworking fluids. So today we're going to discuss both those topics. We will go over some of the same ground that we covered last time when we were just looking at North America. We'll look at some of the fundamentals are the same in these other markets, and then there's some variation. So it's interesting to sort of compare and contrast across the regions. Konstantin and Gabrielle will be the kind of key speakers today, but we have Jason on the call, who most of you, I'm sure, will have remembered from our last session, who really did the deep dive into the US and other North American markets. So we certainly can take questions around comparing the US market to these markets, or delving deeper into the individual, rest of the world markets that we're covering. So I think it's important to understand that there's a lot of uncertainty in the future, as we know, politically, economically, and so we present a range of scenarios in this work, and Konstantin will talk through initially about how we build up those scenarios and what drives them, but I think, and we can all debate whether the most aggressive scenario is too aggressive or not aggressive enough. But I think if we can at least all agree that come away with understanding what are the key drivers influencing that projection, then I think that's at least a first kind of good step. We feel pretty confident about our methodology and approach, but we also welcome the debate. There is a huge amount of uncertainty, but I think we're pretty transparent in how we've built up our models, and so yeah, look forward to the discussion. Everything will be available and shared with you separately on the website. And so, all of this is, completely available to you when we're fully open to sharing everything with you. I think we can go on to the next slide. And I'll pass on to Constantine to walk us through the beginning and really the outline of the presentation today. Yeah, thanks, Constantine. Over to you.
Great. Thanks, Annie. Thanks a lot. All right. So just before we go into the actual presentation, just to make sure we are on the same page in terms of the definitions and acronyms. So all of this would be included in our full report, but just briefly. So we divide vehicles into, ICE, internal combustion engine vehicles, and various types of electric vehicles. When we say vehicle park, so that means the total number of vehicles on the road in stock, basically in a particular country or region. And then we have different types of metalworking fluids. We refer to removal fluids. Sometimes they called coolants, but we call them removal fluids. And there are other types which are briefly mentioned here. Scrappage rate is I think we'll get into it a little bit later, but that would when we talk about overall vehicle park, that's the amount of vehicles being taken off, retired from the market as a percentage of the total park of the vehicle, total number of vehicles on the roads. Okay, so that's really a quick page about acronyms, and then the presentation. We will follow really this overall structure which we used for the previous presentation for the US, for North America. So we'll start with the some overview of the technologies, OEMs, and methodology which we employ to model the market. Then we go into a discussion about metalworking fluids, which is primarily about, how does the, what kind of assumptions drive the modeling, what sort of reduction of metalworking fluids per type of vehicle, per type of fluid will likely be there, and why. And then with that, we will move on to the actual kind of the most important part of the presentation, which would be about showing you our forecast for the vehicle sales, for the vehicle park, and then for lubricants, for PCMO, for metalworking fluids, and electric fluids for electric vehicles. Yeah. Which is that last piece about growth in electric fluids, which would include, engine oil for electric vehicles, grease, gear transmission oil, and so on, and coolants. So then we'll start with a couple of slides about introduction, and I think we talked a little bit about that last time, but also to recap. So there are various types of technologies, right? We all know, conventional internal combustion engine, but in terms of various types of electric vehicles, we have hybrids, sort of conventional mild hybrids, and plug-in hybrids. Then we have battery electric vehicles, and then we have different hydrogen types of vehicles. So historically, I mean, we all know about the plug-in hybrids and conventional hybrids and battery electric. A number of different OEMs sell them, and one of the question is about, okay, where will be where the sales will go, what types of vehicle will be ultimately dominating the vehicle sales. And I think the answer to that question is not in our presentation is slightly differs by region, and you will see the forecast for sales, some faster penetration of battery electric in Asia, for example, and we'll see the composition. But ultimately, at the end of the day, the hybrids are hybrids is a kind of a bridge technology between internal combustion engine and the ultimate battery electric vehicle. So it includes both IC and electric engine, and it's more costly to produce for that reason. So, you know, once the a number of kind of barriers will be overcome, which is, you know, charging infrastructure, some challenges with the driving range, or, you know, more efficient batteries, lower cost batteries, and the price of battery electric vehicles. So once of certain those barriers would be overcome with time, we will see the share of battery electric vehicles be higher than the other technologies. So that would be, and that's kind of indicated here as number one on the chart. So, but it will take time. You know, it will you know, it depends on the speed of those barriers to be overcome. And then lastly, the hydrogen. I mean, there's quite a few discussion about hydrogen vehicles, and I think you know, and we got asked as well when we discussed this report about those vehicles. So, and when we did the research, we looked at them. We also talked with OEM, and if we just take, and which is the scope of this report, is really about consumer automotive market. We don't see hydrogen electric vehicles as very, you know, dominant or big technology for the consumer market. It will, and this was what, you know, this is echoed by OEMs who say it's not the priority technology for the consumer automotive. Now that technology, and that's primarily because you know, there's some challenges obviously with the infrastructure for hydrogen, which is very far away from being in place. There's some challenges with the technology itself, and also it's sort of less efficient way of the drivetrain, because, you know, you use electricity to produce hydrogen, then you use hydrogen to produce electricity in the vehicle, and then which drives the electric motor, and then which you know, makes, you know, moving the vehicle. So, you know, ultimately battery electric vehicles is more suitable technology for consumer automotive. However, for commercial applications, off-road or on-road commercial, you know, the hydrogen vehicles will be used, and it is more suitable. We'll not go into that, but just in case that it's not necessarily completely out of the equation yet. Then, you know, how do we really looked into the and forecasted the market, and for vehicle sales for in different region. I think, you know, we looked at government regulations, and we looked at also at the regional level, and we looked at the you know, OEMs and what OEMs are really saying, you know, putting it out there in terms of their investment into electric vehicles. And like there's some examples here, but we all see that all major OEMs are invested into electric vehicles. They look to electrify, if not yet, they look to electrify all their portfolio of different vehicles. They set targets in terms of how much electric vehicles should be constituting out of the total sales, and it's all driven primarily by the shifts in the consumer demand, consumer preferences, but more importantly by the government regulations, as it's more important, you know, a bigger factor in the shorter term, which, you know, regulations are targeting, you know, emissions and penalizing OEMs which have higher share of their you know, conventional vehicles. Okay, so maybe we move on to the next slide. So really, how do we how did we produce the forecast? And this is very similar to the North America presentation, which was we did before. We've obviously with the other you know, the difference, I guess, is that for for North America, we really looked at by country, and this was reflected in our report, where you can see the forecast by country. In the case of other regions, we really looked at the forecast by region, so Europe, Latin America, Asia Pacific. So we started with the vehicle sales, and ultimately, so the vehicle sales are, driven by the, overall by the economy, by the buying forecast for the GDP, forecast for the demand for vehicles. So the sales is the kind of important first step, and then production is usually follow the demand. Obviously there is some imports and export which were also taken into account, but those two kind of are linked with each other. And then we used a number of assumptions about, if we take sales ultimately to forecast the PCMO for motor oil, we need to arrive at the vehicle park. So we used the scrappage rate, assumptions about scrappage, how many vehicles are retiring and how fast basically the vehicle park is renewing. And there are other assumptions about what I'm saying, about about production, how production would grow, partially driven by the sales, but there is some imports and exports also to take into account. And then finally, if we look at the kind of longer term forecast, this is where we looked at the sales, sales targets, and were driven by OEM announcements, and more importantly by government regulation, government goals in terms of, usually in many cases we see that the government state clearly how fast electric vehicle sales would constitute the majority, or banning sales of ICE vehicles by certain time frame. So all of that is taken into account. So ultimately, the model basically, has all the numbers, all the sales, production, and total vehicle park, and then we make the assumptions about, how much lubricants is used per vehicle, basically, right? So for metalworking fluids, we make different assumptions about, about different types of metalworking fluids, but more importantly, by different assumptions for different types of vehicles. So, it's much more used for metalworking used per one ICE vehicles and much less per other types of electric vehicles and so on. So all of that we will discuss in a bit more details. And then similarly for PCMO, we make assumption about sump size, drain intervals, and multiplying basically with the total vehicle park, we arrive at the demand for the motor oil. And electric fluid, very similar. We know the production, the different vehicles, how much is an overall vehicle park. So we make some assumptions about first fill and service fill and arrive at the demand. So all of that, and again, also to account for a number of different scenarios, we use different base and aggressive scenario for these different regions. So all of that is fully quantified, and the output you will see. This is what is on the slides. This is coming from that comprehensive model which we have built across during the course of the project. I think that's really my introduction, and I'm handing over to Gabriel, who will take us through the assumptions about metalworking fluids, and then we'll look at the output of the model for metalworking, PCMO, and electric fluids.
Sure.
Thank you, Gabriel.
Thank you, Konstantin. In the next section, we'll focus a bit on the inputs of our modeling, namely the metalworking fluids reduction in EV production by region. So first, we looked at the North American, which you're all familiar with. These slides, which are followed, they're put together in order to compare and contrast across regions. First, we look at the North American situation, and then we add regions. So looking at the two regions, Europe and North America, there's some similarities. In terms of market structure, you have the same OEMs, you have EV sales targets, and similar technologies at similar stages of EV development. Here, we're just trying to single out the consumer automotive demand, which in both of the regions, they're the lion's share of the transportation segment. Some variations are in aerospace, where aerospace metalworking fluids consumption is larger in North America compared to the European side. Commercial automotive will start to see some changes at a later stage, as there is a significant delay in development between consumer and commercial automotive. And on the next slide, we're focusing on APAC and Latin America, similar slide as to the previous one. We single out the consumer automotive demand, and we purposely singled out also the two-wheeler metalworking fluid demand out of APAC, although it belongs to consumer automotive. We did it for the sake of consistencies with the other regions. We all know that the APAC two-wheeler production accounts for 92% of the global two-wheeler production. So it's a very, very large market for two-wheelers. Aside from that, China is the largest market for vehicle sales and produces the largest number of cars in the world. APAC is the largest two-wheeler market also in the world. Brazil, on the other hand, for South America, is the largest market and the biggest producer of transportation equipment. The top 5 producers for passenger cars in Brazil include Volkswagen, Fiat, GM, Ford, and Renault. Okay, and also importantly, like when we look at APAC, China, Japan, and South Korea make up most of the metalworking fluid consumption inside APAC. So remember that.
I think just one comment here, Gabrielle, as well, if you don't mind, is just to also acknowledge the scale of the different size of these markets. When you look at you're talking about 260 million gallons in APAC versus less than 20 in LATAM. So I think yes, the structure of the market, not too dissimilar. And when you look at these sort of pie charts, but LATAM, despite being perhaps more sort of closer partner to North America, the size of the prize total is much smaller.
Yeah, it's just a fraction of that.
Mm-hmm.
To continue with the metalworking fluid side, let's look at the metalworking fluid impact coming from different parts associated to hybrids and BEVs. The body of vehicle doesn't really change. There's no change in metalworking fluid consumption for both hybrids and BEVs. On the drivetrain side, there is significant changes because for battery electric vehicles, we have a simple drivetrain system with much fewer parts actually compared to ICEs. Hybrids have a more complicated and sophisticated drivetrain with more parts than ICE vehicles. On the engine side, there is at least one e-motor for BEVs, and for hybrids, you have both the e-motor and the internal combustion engine, but there is a smaller e-motor compared to the BEV, and you also get the battery. Okay, that's the major differences. On the next slide, we dig deeper into the metalworking fluids impact, but this time by fluid type. Removal fluids are the largest category, typically in most regions. So here I exhibited the European demand split, which is very similar to the American one. About 55 to 60% of the metalworking fluids consumption in consumer automotive is removal fluids. Okay, continuing in this line of thought, the removal fluids are the most impacted fluids because in BEVs, there is a significant reduction having no engine. And whereas on the hybrid side, you have a slight reduction thanks to the smaller engine compared to an ICE. On the forming fluid side, you have very similar. There is no change in BEV versus ICE. There's perhaps a slight increase for hybrids because you have more wiring, die casting fluids for the e-motor and battery housing. For protecting fluids, there is a slight reduction, basically in moderate reduction to BEVs and hybrids, thanks to the fewer parts. In treating fluids, you get a medium reduction in BEVs, thanks to the lack of engine parts, but it's still used in chassis, suspension, brakes, and steering. On the hybrid side, there is a slight reduction, slightly lower consumption due to the smaller engines. To continuously focus on that, we used on this slide similar assumptions for metalworking fluids reduction per vehicle type as in North America. As previously discussed, the largest impact in removal fluids is basically associated with the BEV surge in production. You have an 8% reduction, hypothetical reduction. So if you were to have 100% metalworking fluids for an ICE, you get a 3% overall reduction in a hybrid and a 33% in a BEVs. And this is due to the removal fluid, which takes a 50% hit from compared to an ICE. Okay. The next section, we're focusing really on the EV sales models and calculations, which we put together for this report. This slide is essentially focusing on the various EV targets by regions. You all know about USA, the one which Jason discussed last time. The European target EV sales target is 50% by 2029 in a conservative scenario and 50% by 2025 in an aggressive scenario. APAC has a lower target, and this is basically mostly Japan, Korea, and China. It's around 30% by 2030 in a conservative scenario and 40% by 2030 in an aggressive scenario. Latin America doesn't have any, they have the lowest targets. They're Kline penciled in at 5% by 2030, and there is no aggressive scenario due to the lack of government initiatives. Notably, on this table, you see APAC, even though it has lower EV sales target compared to Europe and US, it has a higher BEV share of EV target of 60%. And this is mostly due to China. China has large, strong domestic OEMs that produce BEVs. So they're actively pursuing a BEV strategy, and they plan to export those vehicles in the rest of the region. Also, interestingly, the two-wheeler EV targets might become more important for Asia Pacific. If you exclude China, Japan, and South Korea, you have other countries like India, Thailand, Vietnam, Philippines, Malaysia, which have a very high two-wheeler population. On the next slide, we focused on the EV sales penetration targets, and it's in orange. So here you can see the variations and the impact it's going to have all the way to 2040. Europe is by far the most aggressive thanks to the targets it has for EV sales, followed by US, Asia Pacific, and Latin America, which basically has no targets. Interestingly, if you look at this chart, you would assume that, okay, Europe definitely will have more EVs. There will be more, the highest penetration. But if you further try to look at the part and analyze it deeper, you'll see that the situation is completely different. So let's dig into that. On this slide, we look at new car sales as share of the car park, which is basically renewal rate. How fast does the park in the US, Europe, Asia Pacific, and Latin America renews? APAC and Latin America have the best park renewal rates due to low motorization. So we have some of the lowest motorizations in the world in these two regions. And Europe essentially is due to altering demographics, it's expected to underperform in terms of park renewal rates, the other regions. On this slide, we focus on the scrappage rates, which again, scrappage rates means the share of vehicles that retire from the park. Low motorization rates bring low scrappage rates in APAC and Latin America. On the opposite side of the spectrum, we have high motorization rate in the US, which brings a high scrappage rate. There is also a very well-developed automotive recycling market in the US. The federal government has invested in the development of technologies that unlock domestic sources of critical minerals and circular economy. And Europe, due to altering demographics that adds to higher scrappage rates, combined with a high share of diesel-powered cars that travel 3 to 4 times more than gasoline engines before needing a major overhaul. So
just to add, Gabriel, on the other slide, I think this is where, and this is very interesting. So we saw that the targets for Europe are much more ambitious in terms of electric penetration of electric vehicles. But I think this slide shows it that the park is much slowly, it renews much slowly, much slower than in the US, for example. And I think here the challenge here again, and with Asia as well, the challenge is that in Europe there are many different countries in Europe. You know, while we have so, you know, UK or Germany or France, you know, the average age of the vehicle is sort of around 10 years. If we look at the you know, East Europe, you know, Poland or other countries, it's much higher. So what tend to happen is that the newer, you know, vehicles, which older vehicles, get shipped towards Eastern Europe and other kind of not Western, you know, South Europe countries, and their vehicle park is much older. While the you know, Western Europe park renews faster. So that's, you know, if we combine Europe overall, we can see that the scrappage rate is not high for that reason, which obviously slows down the vehicle park renewal. And although we have much ambitious electrification targets for sales, it takes longer to get those electric vehicles into the park and replace the existing vehicles. Okay.
Sure. This is much like the North American situation. The US ships a lot of used cars, secondhand cars, right, to Mexico. And this is the situation what happens with West and East Europe. So a lot of Western European cars, used cars, end up in the market of East Europe, and they're used for maybe 10, 15 more years in some cases. I know countries like Poland, Romania, and Bulgaria, like in East Europe, that the second-hand car market is it's two to three times larger than the new car market. So this is to emphasize on what Konstantin said. So on the next slide, bearing in mind the situation that exhibited before with the scrappage rates, right, and the park renewal, you have USA, the PCMO demand in the USA falling faster than in Europe. The USA will see a faster electrification despite European having a more aggressive EV sales target. So this is purely thanks to the park renewal rates and the scrappage rates in the US. Also, Latin America is the safe bet, as you can see here, because you have growth, you have basically very low EV sales target or almost none, I would say, across the region. Whereas Asia Pacific is a good market till 2030, 2031 perhaps, after which it will start to electrify fast. And in the aggressive scenario, you will see that Asia Pacific is converging basically with Europe and USA. And this is obviously due to Japan, South Korea, and China. So if you single those markets out, you'll see a more linear, in line trend with Europe and the US. Okay, on the PCMO side. Moving forward to the metalworking fluids, to stay with in the same line of thought, the rising commodity prices will trigger growth in Latin America, which will drive more vehicle demand and production. The energy situation in Europe will prolong the recovery, and the bump will probably be postponed to 2027. So here you can see that Europe was expected at the time of this report was conceived. Europe was expected to fully recover in 2025. This is recovery volume. But the situation will probably prolong the bump 2 to 3 years later. The US, on the other hand, although it looks lower than Europe, the demand is actually fully recovered, and this is growth mostly, like starting with 2021, 2022, you already have growth in the metalworking fluids market. Currently, the US is the largest importer of auto parts globally. With the EV trend, more manufacturing is expected to relocate domestically. So this will fuel some of the metalworking fluids growth. And also looking at the EV situation, the metalworking fluids will peak together with the car production before 2030. Yeah. So this is the base scenario.
And just to add to that, elaborate a bit, Gabriel, if you don't mind. So, I mean, we can see that there's some growth here. And I think the point Gabriel was making about the recovery is that, we saw really a decline in the vehicle sales and vehicle production during COVID and post-COVID. So it's not, in Europe particularly, not, the vehicle sales and production specifically is not back to pre-COVID levels. And with the energy crisis now in Europe and, much higher manufacturing costs because of that, and, various supply chain issues and so on, various other factors, the production is really, still, lower than his, pre-COVID levels. And it's unlikely to recover, fast, especially, also macro forecast is now looking at the mild recession in, early next year. So all of that would probably, because this graph was, we did the analysis sort of before the energy crisis in Europe. So that that impact on Europe might just move the graph, move the peak further down the line. And then, just an overall picture here on this graph, I think, so what do we see? We do see that the metalworking fluids would slightly increase in the shorter term, but will come down in the longer term. And that's primarily driven by the fact that in sort of next 10 years, there is a considerable share of the hybrid vehicles, which, as Gabriel touched on that earlier, there is only marginal decline of metalworking fluids used per one hybrid vehicles compared to the ICE vehicles. So it's only when the battery electric vehicles become a majority of the vehicle sales, and therefore also becomes a majority in the production of the vehicles. This is when it would have a significant impact on the metal fluid demand. So that's why we see the decline in the longer term and sort of more optimistic picture in the shorter term, in next say 5-10 years. Okay, and then the final point, I guess, is that while we see Latin America doing very well, like Annie said, we just need to keep in mind that it's much smaller market size. So I think, combine. I think the growth, if growth needs to be combined with the market size, which is that what can be used to understand the potential of each market. Okay.
Sure. Now that you mentioned hybrids, going back to the PCMO demand, hybrids are also, like with Europe having more aggressive EV targets in the current setting, you will not have charging stations. You will have an electricity problem. So hybrids are more likely to gain a share of the market and grow in the current European setting. So this will also add to the PCMO situation. Basically, the divergence between Europe and North America, where we see more BEVs, Europe, even if it wants BEVs, it doesn't have the necessary electricity to power those BEVs. So we might have more hybrids.
Yeah, I mean, I think this energy crisis is really, as the guys have said, we did this work just, we built this model in the summer, right? And presenting the results. And even since then, now we're in winter here, the energy crisis is very severe. I think we read the other day that Switzerland was banning the charging of electric vehicles, right? Because of the energy crisis. So it's really real. So, but, the point here is we're looking at a longer term forecast. This, the sort of yearly or within a year, the kind of bumps in the road that, will be there. But I think we can still kind of stand behind the longer term outlook, but still being aware of some of the, the real challenges that are facing, and potentially, you'd obviously argue that's good for our business to maintain the hybrid park. But yeah, just one example, which was quite shocking to see that, the no charging of the electric vehicles in Switzerland. Yeah.
Sure. So this is the base scenario, and this is the aggressive scenario. There is very little differences, I would say. It's just that the market is flattening sooner with the aggressive scenario. And this is mainly because metalworking fluid demand is tracking vehicle production. So it has to do with peak car production rather more than with the BEV penetration, because BEV penetration is starting later in 2025 and is accelerating towards 2030. So in the next section, you remember I was singling out the two-wheeler out of consumer automotive and posing it here for you due to its background story. So it's a story in itself, the two-wheeler situation. Asia Pacific is the global leader in two-wheeler production, accounting for 56 million units or 92% of the global production. India and China account for nearly 2/3 of the global production. And all these countries, they have large populations. So here I exhibited China, India, Indonesia, Malaysia, Philippines, Thailand, and Vietnam. So aside from the EV cars, you have two-wheelers. And we penciled in one scenario based on the current environment. EV sales, two-wheeler EV sales in 2030 projected at 25% and in 2040 at 80%. This is, it's very easy to produce an electric two-wheeler, and the materials needed are a fraction of that of cars, and the prices are much lower. So we see a rapid surge of two-wheeler EVs by 2040. Okay, in the same chain of thought, we applied for cars we use for motorcycles, right? For two-wheelers and mopeds as well, and scooters. The consumption ratios of removal fluids are set to decline with 60% in a BEV compared to an ICE two-wheeler. So that's an order of magnitude much higher than compared to that of cars. And this will translate to a total metalworking fluid decline of around 50% for BEVs compared to ICEs. Furthering this idea, we modeled the situation for two-wheelers, and even though the graph here looks quite flat, this is due to the axis. the overall metalworking fluids increases short term due to the increase of vehicle production and then gradually fades. And also I exhibited the metalworking fluid demand by product category. We see the sharp impact in removal fluids and the surge in forming fluids. The surge in forming fluids is reflected in vehicle production, which will keep metalworking fluids stable, relatively stable actually in two-wheelers up until 2030. On the next slide, focusing more on the macro, it's an imported slide from the previous presentation. Here, obviously different trends impacted regions differently. If you take the first one, so the purchase grants, you have different allocations in different countries within Europe, not to mention across regions. Chip shortage would likely hit China more than the US and Europe, with the recent Biden administration decision to implement an extensive ban on the sale of advanced chips in China. So all these different disruptors will have different impact across regions, which is very hard to look at. And it's every day something is happening. And as Annie mentioned, Switzerland with the banning of electricity, which is not even on this chart because it happened yesterday. Focusing a little bit on the growth in EV fluids. Here on this slide, we're looking at different properties of new EV fluids or even existing ones. I'm not going to stay too long on this slide because it was previously presented. So the APAC leads in EV fluids demand even currently, and it's set to accelerate until 2040. But this view is largely distorted due to China, South Korea, and Japan. So if you single those out, the graph would look totally different. China has domestic OEMs to meet EV sales targets and will likely export such vehicles across the region. The US market could easily outperform the European market if the F-150 becomes popular. Such vehicles have at least 2 e-motors, meaning more lubes, as opposed to the European compact cars, which have 1 e-motor. Again, Latin America is flat, so there's only 5% EV sales target. So it's very much there are very little opportunities in EV fluids in Latin America. Okay. The main message of this slide is that OEMs are open to collaboration with any blender that can provide operational advantage over existing solutions, which was not the case in the past. They had very high entry barriers. And this comes as OEMs are quickly ramping up BEV production. And this has put a lot of pressure on vehicle design, and many OEMs have to keep their doors open for ideas and new collaborations. In terms of customization potential, if you look at BEVs, you have high customization potential, so high solution potential for blenders in transmission, coolants, and grease. On the hybrid side, you have high potential for coolants and medium potential for transmission and grease. Some interesting developments here, perhaps you've read in the press about it, is immerse cooling, and is being currently used in BEV racing cars. There is 0 to low glycol-based lubricants for dual cooling and lubrication function. So this would mean 1 lubricant for both cooling and transmission. There is also multi-speed gearboxes, which are used in the BEVs in Europe, but I'm not familiar. I don't know whether they're produced in the US yet, but this will definitely change over the next few years, offering opportunities for new formulations. for greases, we all know that the noise and thermal stability, the electric strength, anti-corrosive character is highly required in such new formulations. In terms of key takeaways of this presentation today, the biggest opportunity outside of US for PCMO and metalworking fluids is Latin America, and you saw the reason why. Their EV targets are basically flat or very low. This will likely change, but this will, if it changes, it will be something like years from now. There is some challenges in the sense that looking at the market, is the supply being able to keep up with the demand in EVs? Is affordability an issue right now? We saw the price surges of many EVs. Is the charging infrastructure ready? And if it's ready, like, is there enough electricity to power those vehicles? And even further than that, is the grid able to support such load at, random times? Is there anything that balances the grid, or is there enough to balance the grid? The third point would be PCMO is expected to decline rapidly if there is a transmission, if the transition to BV intensifies. This is valid for some regions like North America, particularly the US. It's questionable at the moment in Europe. I think we'll see more hybrids there because of the aggressive targets. There's no way to charge those BEVs. The outlook for overall for metalworking fluids is better. It's better than PCMO, certainly, which is flat out going down. Metalworking fluids are still required for manufacturing BEVs and their components. There is actually volume growth for some forming fluids. Even with more aggressive EV targets, Europe, as you saw, is likely to electrify slower than the US, which frankly, before this presentation, I was surprised. And after punching in the numbers and doing the calculations, me and Jason, we had to face the reality of our calculations. EV fluids will evolve. So far, we're looking at OEM fill for life promises, which what does it mean? I mean, you look at Europe and OEM like Audi, right? Audi is telling us 150,000 kilometers is fill for life. And we all know that vehicle is running way more than 150,000 kilometers. So the concept of fill for life is challenged. There is also the example of formulating a single fluid for cooling and transmission, and there is a high demand for such solutions from all OEMs. APAC is by far the largest market for EV fluids, and it will remain so. But the question here is, can you enter the market? Can you enter China? Is China accessible? Is it better to just go to South Korea or Japan? Or what to do in that direction? So the safest bet, again, is probably Latin America. If you want to keep selling PCMO and metalworking fluids. If you want to enter EV fluids, definitely APAC is the place to be. And the last point of the energy transition, as Annie started, we are facing uncertainty in the global economy and political environment. We are also kind of in a situation where the government is dictating for the private sector what to do and when to do it, which was not the case in the past. And I will end with that.
Great. Just I guess to add, I think it's Gabriel completely makes sense. All of the conclusions. I guess one more point is that we were somewhat constrained by looking at the regional level. Looking at the demand at the regional level. But if you look at the if you get one level deeper and look at by country level, obviously there's much more details there. So for example, in Asia, you have Japan, China, Japan, South Korea, which is much advanced in the electrification kind of path, while looking at India and Indonesia and other Southeast Asian countries, this is much slower. And also there is much more lubricant, motor oil demand increase expected in the future. So, for PCMO, certainly there's some opportunities in Asia. Obviously, Latin America is there. There are other, Africa, maybe other countries which are there as well. I think metalworking fluids is a bit less, is a bit more kind of consistent in terms of the message. But certainly the opportunities connected with the increase in the production just by sheer number of vehicles produced, yes, more electric vehicles, but just the overall number of vehicles being produced contributes to the stronger, some marginal increase in the demand. And finally, I think electric fluids is where indeed that, that graph where we see really a big increase in the demand in the future. And it's still a lot of the questions are there in terms of the formulations, what types of, there's a lot of work on coolants, going on to solve some of the technical issues. There is opportunities for cooperation with OEMs still. So I think it's very still it's very early days, and there are certain opportunities in the electric fluids.
Just a final comment from me before we hand back to you, Holly. I think what we've focused on in this presentation is gallons, right? Gallons of motor oil, gallons of metalworking fluids, which is only one way to look at this, right? I mean, we're looking at how these trends are impacting the volumetric demand. It's not to say when we start looking at value what that means. And I think it's, we see it happening already, but I imagine in 10 years' time, the companies that are all here today listening and others may not be looking at the business on a per gallon basis to generate value. Not to say that I sell my fluids at $5 a gallon and that's how I measure my performance, right? On a per gallon basis. So, I mean, it depends what type of business you're in and where you sit within this value chain. But, today it was important to look at the gallon story to understand how you can influence your dollar story. And I think that's because there's plenty of opportunity. And we shouldn't be sort of thinking too much after 2030. It looks a little bit maybe doom and gloom. That's we're such a fundamental. The industry is such an important and valuable industry. There's plenty of value to capture from the market in potentially slightly different ways. Oh, you're on mute, Holly.
A couple of questions. When we did get a couple questions in the chat, and when you were speaking about the vehicle scrappage,
yes,
we got a question about what federal government investments in recycling were you referring to? Can you give more specifics?
Sure. So I was more focused on the differences between regions. So if you look at the US, being more closed compared to Europe, had time to develop the recycling and automotive recycling market. So it's been for the last decade or more, the federal government has been investing or focusing on the investment of technologies that can recirculate or recycle many materials. In Europe, if you look at that, it didn't have the time to do it because a lot of the old cars, instead of being scrapped, they were shipped to East Europe. So
Right.
you look
Okay.
at markets like Poland, Romania, in East Europe, and more than double of the new car sales are being sold in secondhand cars. So you can't develop a auto recycling industry when all the old cars are moved to East Europe. So that was the situation in Europe compared to the US, where it had the time to focus on and was investing into a circular economy.
Yeah, I think it's more what we see now. I think there were some scrappage schemes in the past, but now really it's more about, you know, and that's particular as well, the you know, this still that the new vehicle sales are somewhat lower than pre-COVID. So, you know, these various schemes exist to incentivize you know, new vehicle sales, right? So some grants, some discounts. I don't want to go, you know, China, for example, you need to register vehicles and pay, you know, more than $10,000 per vehicle to register IC vehicle versus electric. There's nothing. You don't need to pay for registration. In the UK, there is some, you know, tax advantages for businesses buying electric, and you know, every country kind of finds its way to incentivize. You know, Norway is another subsidies and so on. So every country kind of work its own legislation to push electric, but it's more from the kind of sales point of view rather than you know, trying to take certain vehicles off the road.
Okay, we got a long question asking about whether if North American consumers choose HEVs over BEVs, what implications might that have in the North American market? It talks about the fact that electric charging infrastructure isn't quite adequate, and the driving distances discourage BEVs over HEVs. In any case, what implications would that have in the market if consumers went more with the HEV than BEV?
I think the grid was covered by Jason last time, the grid and the electricity. I think if he wants to do it again.
You can reiterate some of your comments from last time, yeah.
If you want to do it again,
yeah, there are a few things that I can probably mention here, which is obviously if the market tends to go to HEVs over BEVs, it'll be a positive impact to lubricants and metalworking fluids due to the components in terms of production and also the lubricants used in ICE engines. But as a couple of other things, as for like the charging infrastructure, correct, at the time being, yes, it's not quite adequate. Although looking forward, we don't necessarily see this as an obstacle to BEV market expanding. HEVs have been around for a long time. They've not necessarily really caught on versus the recent trends have been BEVs. This is just what consumers are looking at. We're kind of looking at a transition in technology. This is, I mean, a better analogy might be the old Nokia brick and Motorola flip phones to iPhones, right? It's just a transition in technology. And so this is basically driven by consumers. There aren't a whole lot of federal regulations or government incentives that consumers are using to buy a BEV over an ICE. This is just what the market is looking for. And in terms of, just as a funny anecdote for driving distances, I mean, on a single tank of gas, we can get from, I'm in Houston, we can get from Houston to Austin without a problem. However, I can't do that because if you've ever heard of Buc-ee's, every time we go near a Buc-ee's, we have to stop. It takes 30 minutes to go in and out. Could easily charge my car at that time, but you know, it's becoming more of an experience now stopping at Buc-ee's. And so even though I can drive that distance, it's becoming more and more difficult.
I have heard about Buc-ee's. Buc-ee's has been in the news lately.
Yeah, if you ever make it to the south, go to Buc-ee's.
Yeah, I will definitely have to check it out. So I got a question from one attendee. What is the difference between regular MWFs and MWS for EV?
there is no difference. We're talking about metalworking fluids for use for ICs and metalworking fluids used for EVs. None. There is only more wires. So you have more wire drawing fluids, right? But that's marginal because you use very little lubricants to produce wires. You have more die casting fluids, right? That's forming on the forming side because you have the battery housing and the e-motor housing. But even on that side, you don't have more, you have less because the amount of die casting loops you use for ICs is so much larger. So there is no difference there really. You can sell for a the same metalworking fluids that you sell for an IC for an EV. You just have less, just the reduction. We're talking more about
Right.
the reduction than the
Okay.
type.
Do you think, Gabrielle, that it has to be sort of marketed differently at all, or no? Like from the
No, not
OEM's
at all.
perspective, there's literally nothing. It's just volume.
It's just volume. Absolutely no difference.
Yeah. Just to add to the previous question about hybrids, I think that's completely, very valid points. I think it was, included in our different scenarios because one scenario I used much faster, better electric growth, and the other scenario used, other scenario was, keeping hybrids basically for longer.
Yeah.
So it's we embedded that logic about.
So you're saying the conservative scenario in the US report is pretty much that.
Yes,
Yeah.
yes, yes. So it's not in this report, but it's in the previous North America report. Those three scenarios there.
Okay, so just as a reminder, the final report, which encompasses what was previously presented, North America and this report will be consolidated and posted on the ILMA website. After the first of the year, we will send an email out when they're available. We don't really have any additional questions. And we've been a little over an hour. So I want to just take the minute to thank you all for your presentation and for all of this information. It's a lot to digest, but we'll have a lot of time to really drill down into it once the reports are posted. The slides will be available on the ILMA website, so if someone wants to download the slides, we will have those up. And I just want to say thank you, and I want to wish everyone happy holidays. And we look forward to more of these presentations on this and other topics next year. Thanks, everyone.
Thanks, Holly.
Thank you
Thanks for
very
having
much.
us,
Thank you.
everyone.
Thank you.